So let's dive into the various approaches you can utilize to merge your finances seamlessly and set the stage for a prosperous future together. First off, let's talk about setting joint financial goals when it comes to your financial aspirations, whether it's saving for a dream home, planning for retirement, or setting aside resources for your child's education. Your goals should be clear and mutually agreed upon. This alignment does not only promote unity, but also drives your financial decisions and actions. Creating a budget together is another effective strategy. A joint budget gives you a clear view of your combined income and expenses, helping you make informed decisions about your spending. It can be as simple as listing down your sources of income and tracking where your money goes every month. Remember, the key to a successful budget is honesty and transparency. Hidden expenses or secret stashes can lead to mistrust and financial instability. Now let's talk about bank accounts. Should you have joint or separate accounts? This is a personal decision and depends on your comfort levels. Some couples prefer having a joint account for shared expenses while maintaining separate accounts for personal spending. Others choose to merge their accounts completely. Whichever route you choose, ensure it's a decision you both are comfortable with and that it supports your financial goals.